Welcome to BigONE Weekly News Update. I'm Mia. Crypto markets experienced a modest pullback last week, but the broader July recovery remained intact. While Bitcoin and major assets gave back some recent gains, market structure suggests the move is more of a healthy consolidation rather than a reversal. Meanwhile, offshore buyers have emerged as a key force supporting the market as institutional US demand remains muted. Crypto pulls back after July rally. Bitcoin declined approximately 3% last week, closing near $63,554. Ethereum fell about 3.5% to around $1,885, while Solana dropped 4.1% to roughly $73.6. Hype was the weakest performer, falling nearly 12% to below $52.5 amid continued selling pressure from large holders. Despite the decline, the market showed signs of a normal post-rally cooldown, rather than a change in trend. July's gains largely held, suggesting that buyers remain active despite short-term volatility. Macro environment creates new challenges. Traditional markets faced a more complicated backdrop. Treasury yields rose sharply across the curve, with the 10-year yield climbing more than 30 basis points during July, the largest monthly increase since 2005. The 30-year yield reached 5.271%, the highest level since July 2007. Currency markets also experienced significant moves, with the dollar posting its largest intraday decline against the yen since May. The U.S. Treasury joined Japan and South Korea in a major coordinated foreign exchange intervention, while the Federal Reserve kept rates unchanged at 3.75%, in line with expectations. Meanwhile, U.S. equities remained resilient, supported by large technology companies. The S&P 500 gained 1.1%, the Nasdaq rose 0.55%, and the Russell 2000 ended roughly flat for the week. Offshore buyers drive Bitcoin's recovery. A notable shift in market structure has emerged. Bitcoin's recent recovery appears to be driven more by offshore demand than traditional U.S. institutional flows. Since February, the 3-month Bitcoin futures basis yield has remained below the 2-year Treasury yield, reducing the appeal of the traditional carry trade. At the same time, the Coinbase premium, a measure of U.S. spot demand, has stayed negative for more than 60 consecutive days, marking a record period of weakness. As a result, the approximately 15% rebound from recent lows has been primarily supported by offshore buyers, rather than ETF inflows or corporate treasury purchases. Strategy adjusts its Bitcoin treasury approach. Strategy has shifted its capital management strategy following its latest earnings update. The company increased its dollar reserve coverage from 6 months of dividends and interest back to 25 months, returning to its previous target range of 24 to 36 months. Instead of increasing dividends, Strategy initiated buybacks while its STRC preferred shares remained under pressure. The company's updated approach focuses on 3 key changes: prioritizing STRC stability, using common equity value preservation measures to support the preferred shares, and adopting a more cyclical capital management strategy tied to Bitcoin's long-term performance indicators, such as the 200-week moving average. Coldcard security incident raises wallet safety concerns. The crypto industry also faced a major security incident involving Coinkite's Coldcard hardware wallets. Attackers exploited an old firmware vulnerability related to weak seed randomness, allowing them to reconstruct seed phrases offline without accessing devices or using phishing methods. By early August, losses reached approximately 1,367 BTC, worth around $88.6 million, affecting more than 4,500 addresses. Following the incident, on-chain activity surged as users moved funds for security reasons. Transactions involving less than 1 BTC reached their highest level since November 2022, while approximately 39,600 BTC moved in a single day, just below the record set shortly after the FTX collapse. Key events to watch. Investors will focus on 2 major developments this week: the U.S. non-farm payrolls report, which could influence expectations for future monetary policy; earnings reports from Coinbase and Robinhood, which may provide insight into crypto market activity and retail participation. Conclusion. Bitcoin's recent pullback appears to be a period of consolidation rather than a breakdown. While higher treasury yields and weaker U.S. institutional demand create challenges, offshore buying has provided important support. The market is now entering a critical phase where liquidity conditions, corporate crypto strategies, security developments, and upcoming economic data will determine the next major direction. For now, Bitcoin remains supported, but the source of demand has clearly shifted. Join BigONE today and take advantage of the growing cryptocurrency market.